Welcome back to From Corporate to Cash Flow, where Andrea Cannon and Liz Schwab, two pharmacists navigating the process of building time and financial freedom through real estate investing and lending while working our day jobs. Navigating the journey is difficult, but our podcast guests are experts at showing us how it's done. And today we have Belinda Prattis. Belinda, thank you so much for joining us.
I'm super glad to be here, Andrea and Liz. Thank you so much for having me.
Yes, thank you. We're very excited to hear a little bit more about your story, and I'm excited to ask you a lot of questions that I think will be very applicable to a lot of investors.
Sure.
So just to get started here, wondering if you could just give us, a story about your journey into real estate. So, did you have a regular corporate job? How did you transition into real estate, and what are you focusing on now?
Sure. So I guess I would have to start at 2016 back in Baltimore, my last corporate job. Um, my husband, well, then he was my boyfriend, had just left the corporate job that we both worked at to become a barber because that summer we decided, hey, what would we do for free if money weren't an option? Like if money weren't a thing. And he said, I would cut hair because I love it. I said, then go do that. Right? So he went to barber school and worked in a barber shop while he went to school. And, things were tight, but it was just a matter of we either go hard in the paint or we don't go at all.
Mm.
And in the meantime, that was about April of 2016. In the meantime, from about March of that year, I had been going back to my true love because my answer to that question is I would restart my personal chef service. I had tried my hand at a personal chef service years prior, probably about 12 years prior, but the concept was so new and I think that the timing of it wasn't for me. But here we are 12 years later, it's very mainstream, but the Baltimore market only had a few. And I said, the thing I do for free is I would cook for people. I would feed people. That's what I would do. But I don't want to do it in a restaurant. So,
Yeah.
so
Yep.
he said, well, then do that. So I had slowly been doing some parties and graduation parties and catering, like little local catering events, first for free, then for discounted rates, and then for full rates. And then when I saw that I actually had lots of people, because I'd started marketing, I'd started a website. When I saw that I had lots of people responding and engaging with my posts, I said, okay, hard in the paint or don't do it at all. So that's how my foray into entrepreneurship began.
Yeah. How did that go for you?
It went really well. It went really well. So when I left, I didn't have any clients. I just put in my notice. So when I finally decided, okay, I'm going to jump and the way will just kind of form itself below me, I left my corporate job, gave my notice, and had no clients. And I thought that day I was like super elated to be gone, but then I got home and I'm like, what did I do? I have no
Yeah.
clients. What are you thinking?
Yeah.
But I was part of this like paid lead system, that I found, and I got one client. And with that client, she introduced me to her boss, who introduced me to her boss. And that's how it started.
Yeah, it's funny how just like that one connection can completely change everything, right? Just going
Hmm.
back to the importance of relationships. So,
Exactly.
yeah, that's great.
Yeah.
And then how long did you do this for? Are you still doing it?
No, I did it until COVID. Yeah.
Okay.
So I got 4 good years in there. So there were two things happening at the same time. One, I have some chronic diseases, chronic illnesses that cause chronic pain and chronic fatigue, nervous system disorders, right? So you'll see every once in a while I'll have to stop and drink water. I have nerve damage in my throat, so it affects me when I talk a lot. Um, so that was happening, and then COVID was happening. So my body was kind of breaking down by the time COVID came. So in those 4 years, I had enough clients to where I had two employees. And yeah, and it was great. And they would go out, I'd give them the menu, they would have to shop and then show up at the client's house and do the meal prepping, right? So that's the type of personal chef service we were. And so I let them take over every single client except for my easiest one, the one with the smallest meal plan, because that I could do myself. She only lived a 15-minute drive from my house. So I was like, that's 90 minutes in and out. I can do that. But I found that even after that, after doing her service, I would have to lay on her couch. We were good friends by that point, so she'd be like, "Belinda, if you need to lay down, because I don't want you to get into an accident when you get home, like on the road." So when I got to that point, I was like, I'm going to have to do something. And then, boom, the next month, everything shut down. So I was like, well, I guess there's my answer. So in that time, my husband was building a tiny house. He had taken 2 years to build a tiny house. And when COVID shut his barbershop down, because he eventually did end up getting his own barbershop. And once COVID shut that down, he took 2 more months to finish up that tiny house. We had bought land sight unseen in New Mexico, out in the wilderness, really remote. And with my being immunocompromised, we said, let's go and wait this out. And that just, we know how that went, right? I'm still here, living in that tiny house, still off grid and loving it. So when I got here, I did try to pick up the personal chef service again. I did a few Valentine's dinners, and my body was just like, no. So I needed something else to get into. And he had started wholesaling, and then he learned about Pace, and he learned about Jamil, and then he came across a video with Jennifer Cortez and says, you do this for me now anyway with my deals. You might as well just learn how to do it and make this a thing. And that's how I got started in real estate.
Wow.
So,
Okay.
yeah.
Yeah.
Yeah, it was pretty
So
neat.
then it's nice that, your husband kind of gave you the connection to that and
Mhm.
it's like a mutual interest. And then you got connected into real estate too. So what are you focusing on then within real estate now?
So I was a TC and I was good at it. I joined a team. We were very, very busy. I even served as Northeast regional leader. But then in one of those times when Chelsea and I brought in a speaker to speak to our operators, they were talking about tax strategy for investors, cost segregation specifically. And ever since they came on, they were like in my ear, like, hey, you should really join us because you have a knack for explaining things to people. You're already connected with these investors. And I was like, you know what? TCing's not for me. That's true. So let me transition and still be investor adjacent, and be able to leverage all of the really great connections and relationships that I've created within this wonderfully supportive community.
Yeah. So you're working on cost segregation now.
I
Is that
am.
correct?
Hmm.
Okay, perfect. So I think this is super interesting, but for other people that maybe aren't familiar with what that exactly is, can
Hmm.
you maybe explain that just at a high level?
Sure. So you'll hear a lot of the gurus, Pace Morby included, say cost segregation is one of the strongest tools in the investor's toolbox in terms of being able to keep more of the income that you create with your investment portfolio. So basically, the IRS said, we understand that not everything in a commercial building, and let me explain commercial building, it's any structure that generates revenue, even if that's a single family home, right?
Mm.
So commercial buildings have components that don't all depreciate at the same time. So for the things that depreciate faster, you should be able to take that benefit faster. And so that's what cost segregation does. It segregates the costs of a commercial building into its depreciable parts and accelerates that depreciation. So you have a much bigger deduction up front in those first few years when cash flow is king. Cash flow is always king, but in
Mhm.
those first few years especially. So hopefully
Yeah, no, that totally
that's a
makes
good
sense.
nutshell.
And is this something that, because like we hear about cost segregation all the time about STRs or short-term rentals, right?
Mhm,
So is this something that you would do on like a long-term rental or a mid-term rental? I know you said it's something like a commercial building or something that brings in income, right?
mhm.
But like what type of property are we talking here exactly?
So any kind of property, even if you don't own it, but if you don't own it, you would have had to put at least about 70 grand into outfitting it to be able to receive income. So for example, you might buy a building and or you might buy a laundromat, but you don't own the building. And if you're changing out all of the machines, then that would also qualify for cost segregation, but we're talking long term, midterm, and short term. I know there's a lot of people out there who say, "Oh, you can't cost seg a midterm." That's actually not true.
Okay, okay. Can you just help me maybe understand, like, why do we mostly hear about it about STRs then? Like, why is
Yeah,
it like cost seg STR? Like,
sure. So this is for people who are still in the W 2 and are about to make that transition. This is for you, right? If you own investment properties and you have a W 2, if neither you nor your spouse can be considered a real estate professional, then the other way that the cost segregation would be most beneficial and go towards your active income would be if you own a short term rental,
Mhm.
right?
Yeah.
So, these are for the doctors, the pharmacists, the high end earners, right? Obviously, they're not going to qualify as real estate professionals because it's really hard to show that in addition to your W 2, you put in at least 14 hours a week directly managing your properties, right?
Mhm.
Maybe, but it would be harder to prove. So, if neither you nor your spouse qualifies as an REP, you can still use the cost segregation deductions towards your active income if you have a short term rental. That's the short term loophole that everyone talks about.
Yeah, that's super helpful to distinguish because a lot of times people talk about all the tax benefits of real estate,
Hmm.
and that can be true, but it's not often as true if you're a W-2 worker and you have a full-time job and your
Yes.
spouse also has a full-time job, just like you're
Yes.
highlighting. You
Yes.
can't be a real estate professional, you can't take advantage of the passive income, deductions that you have. Now, we've kind of explained this in other podcasts before, but I'd love if you can really explain to everyone here what is depreciation and why is it valuable? Because aren't we in real estate to make money? So then you're telling me about losses. Can you help me understand those things and how that works together?
Sure. So obviously we want the value of our portfolios to appreciate every year, and they do. And that's based on a lot of factors that don't deal with the actual building itself, right? Speculation, the stock market, just who's moving in, who's moving out, whatever, right? But the building itself is a gold mine because I always say there's cash in your walls. Okay. So, for example, I'll tell you where this started. Hospital Association of America said, we have paint on our walls that we have to change every year because it's antibacterial. And we should be able to depreciate that faster because we have to change it every year. And the government's like, you're right. And that would apply to absolutely every other building that anybody owns for revenue, right? So while the structural things don't, they just depreciate 1 year at a time, right? You're not allowed to accelerate like the foundation, the HVAC system, the roof, right? Anything that creates the shell, we cannot accelerate that depreciation. But the paint, the walls, the carpeting, the tiles, the kitchen cabinets, the copper piping that you use, right? Your lights, your parking lots outside of your multi units, um, every single pad in an RV park, for example, all of that can be depreciated faster. So there are a 5, a 7, and a 15-year bucket. And you would say about 20 to 30% of a building fits into those 5, 7, or 15-year buckets. So
Hmm.
instead of eating one M&M a year for 39 years or 27 and a half years, you're now getting a bunch of M&Ms to eat at once.
I like it. I like that analogy too because it's helpful to understand, right? Like you're going to get these deductions anyway, and it doesn't mean you're losing money, but it
Yep,
is helping you have a paper loss to offset some of the income from the asset, right? And so it helps you
mhm,
pay less taxes in that process, and it especially protects those that cash flow in the first couple of years, like you highlighted, because that
that's
is the most
exactly
important time,
right.
right?
Yes, that's exactly right. Because, a lot of people say, "Oh, well there's recapture, so it doesn't make sense to do it." It's like, I don't know about you, but if I have the use of a dollar, I'd rather have it today because
Mhm.
today it's worth this much. But 5 years from now, we don't know what that's going to be worth, especially given the state of the world, right? So we have no
Yeah.
idea what that dollar is going to buy us. I know that it will buy me 1/4 of a tank of gas today,
Mhm.
so it's just like the time value of money. If you have it to use now, you're not going to go to Disney World with that money. You're going to invest it in something else. And
Totally.
also, when you go to sell, if you use a 1031 exchange or if you structure your entity properly, then you avoid recapture altogether. So that's really a non-issue, right?
Yeah, and can you quickly define depreciation recapture just in case people don't know what that means either?
Sure. So the government says, whether you do the cost segregation or not, we're allowing you to take the deduction for depreciation, but when you sell it, we want that back, or at least we want a portion of that back. So that's what depreciation recapture is, right? So even the government is saying, use the tax benefit now. It's going to save you some money, so use it now,
Mhm.
right? Whereas cost segregation says, use a big chunk of it now when it could really make a very big difference and move the needle pretty significantly, right? Instead of
Mhm.
later, because it's available to you anyway.
Yeah. About how much does a cost segregation study cost, and is it different depending on the size of the asset or the factors of the asset, or is it always one flat fee?
Yes, to the two former points that you made, not to the latter point. If you're using an AI cost seg company that doesn't do an engineered study, yeah, it's probably a flat fee
Mhm.
across the board. Um, but it's a matter of like, do you like to sleep at night knowing that if the IRS comes for you, you're taken care of? You know what I mean? So it's a payoff. But yes, it does depend on the asset and what's going on with it. So, for example, hotels and motels, right? They have a lot of something called FF&E, furniture, fixtures, and I'm drawing a total blank on what the E is, but it's there, right? Equipment, furniture's fixture and equipment. A lot of that falls in the 5-year depreciable bucket. So you can imagine that there would be a lot more for the engineers to run through in terms of breaking that down into
Okay.
depreciable parts, right? Whereas a single family home, especially if it's like not furnished, will take less time. And it also depends on the cost basis of the property. So like for example, I ran a cost segregation study for a sub 2 member where their asset, the cost basis was about 165,000, and that's usually the minimum that would qualify for a cost seg study, right? The reason why it was worth it to her to pay $1,900 to do that was because her wife had just become a real estate professional and she had just gotten a bump up at her W-2,
Oh, nice.
right? So the $15,000 in taxes that they saved, they obviously couldn't use it all in one year. Their tax bill isn't that high. So whatever
Mhm.
they could use that year one, they use, and the rest of it rolled over.
That's so nice. Oh, that's so helpful. And so I know you mentioned some specifics on like the hotels and things like that for the FF&E.
Hmm.
What are some asset classes that have a surprisingly interestingly high maybe amount of upfront deductions from a cost segregation standpoint, maybe that you wouldn't expect or something for people to be thinking about?
RV parks, marinas, campgrounds, and mobile home parks, because there is so much of the 15-year depreciable asset. And there's also buildings, which can be broken down into many different things. So 15-year depreciable assets are things that we find outside: parking, roads, lighting, things like that, all of the pads that have to go in, and then they've usually got laundry buildings that they outfit with FF&E. They've got like a restaurant, a general store. So they've got multiple asset classes in one. And so those always perform the best. Those in hotels and hospitals. For example, I helped a gentleman in Iowa who has a 32-room hotel. Between partial asset disposition and cost segregation, his deductions came to just under a million, which, excuse me, which equated to his deductions came to just under a million in depreciation, and that equated to a $249,000 deduction on his tax bill.
Sheesh.
Yes.
Yeah, it's when you said hospital, I was like, what the heck? But it's funny because these are the things that you wouldn't even think about. I mean, I'm sure people that own hospitals think about that, right?
Mm-hmm.
But myself, I'm not thinking like, hey, yeah, let's do a cost seg on this hospital. So that's interesting to think about the different asset classes and
Mm-hmm.
how this can be utilized.
Yeah.
I was wondering, so I have two random questions. So the first one is, what if someone wants to do an STR just for a year
Mm-hmm.
and then transition into like long term after that? can they still do like cost seg and get the full benefit in just 1 year and then transition it to not a short-term rental?
Absolutely. Yes. I'm actually working with
Okay.
someone with that very scenario right now. I said it's best for you to do the
Okay.
cost seg in the year that it's still an STR.
Okay. Is there anything that people need to look out for, like proactively? Because I could definitely see the benefit of doing it just for a year
Mhm.
and then maybe switching after you take the full bonus depreciation. So is there anything we proactively would just need to be aware of if that's a situation we're considering?
Yes. I would say definitely do the cost seg study in the year that it's servicing as an STR. Okay. And then if you find like if maybe this is your only thing in your portfolio right now and you're just starting and you might need it again, then wait on all of your renovations until after you've already put the building in service. So don't buy, flip, and think, oh, I'm going to do a cost seg. It doesn't work that way. You'd have to actually have the building in
Mhm.
service and then do the cost segregation study because there's something called partial asset disposition, which I mentioned with this hotel, right? So this gentleman bought this hotel and then put about 600,000 renovating everything, right? So partial asset disposition or PAD says that even for the things that are not depreciable, like the roof, usually, right, or the HVAC system, which you have to take one M&M a year, you're allowed to go ahead and depreciate the remaining service years of that particular asset of your building when you are replacing it or repairing it. Okay.
Mm.
So he got the roof done. He did a whole new HVAC system. He even did a little bit of work to like some foundational things, if I remember correctly. So the government says, okay, you did this in year 10 of ownership, let's say. This is the 39-year asset class. You can take 29 years of depreciation for that roof, that HVAC system, all at once. And the reason why is not because, the goodness of their hearts. It's because the IRS says we don't want you depreciating two assets at once. That's fraud, essentially,
Got it.
right? So it's like, all
Okay,
right,
that makes
everything that
sense.
was left on the roof, go ahead and take it now. And then when you put the new roof on, the clock starts again.
Hmm. Okay. And then broadly speaking, I know everyone's like, I'm not an accountant. And do you work closely with like CPAs or accountants to figure out how this best benefits
Absolutely.
individuals, or what does that look like?
Yeah, all the time. CPAs approach us and say, you know what, I've got a client, or the client will approach us and say, my CPA says I need a cost seg study, because they'll look at what they've got going on and they'll say, yeah, you're going to get hit really hard. You've got this asset. Let's go ahead and take the depreciation on this. The reason why there are some CPAs who do this. The big four firms, they have a whole cost seg team. But the IRS has 13 guidelines that make a good quality cost seg study that is defensible, that they won't even take a second look at, right?
Hmm.
And one of those criteria is that it's backed by engineers with
Okay. Okay.
credentials. So that's
So
what
where
makes
does,
them
and
do it.
this is probably a dumb question, but where does the where does the engineering come into play? Is that on your side then as the cost seg person?
Yes. So the company that I work with, Cost Segregation Studies Incorporated, we have a whole team of engineers and they will take that building and they will break it down, reverse engineer it essentially into its components. So we always send somebody
Okay,
to do a
interesting.
site visit, take pictures and video, um, so they can see it and they can also use other assets around it that are similar to it. But then, we get really detailed information from the client, like what kind of pipes do you have? Are they PVC? Are they copper? All of these things. About how much did you spend renovating this, that, the other. So our analyst team takes the numbers and then they get the engineering team to reverse engineer it down to its components and say this percentage of it is like this percentage of it falls into this bucket, this percentage of it falls into this bucket.
Okay, gotcha, gotcha. And then last question about this cost seg for now.
Sure.
So if someone came to you and they're like, "Hey, I'm interested in doing a cost seg," is there ever a situation where you're like, "Hey, no, like this probably like you want to wait to do this," or
Yes.
you make other
Yes.
suggestions instead and then maybe come back to the cost seg?
I actually have to have this conversation with someone tomorrow who just sent me a property of hers to run an estimate on. She had sent me a previous property that didn't qualify because it was under that like 160, 150 mark. This one's 185. So I'm going to suggest to her, do it on both. That way you're paying one fee and you're getting a bigger benefit because you've got more cost basis, right? The bigger your cost basis and the more, I guess, complicated your building, the bigger the benefit. Yeah.
Yeah, that makes a lot of sense. It's nice that you kind of give that recommendation too, because a lot of times, it's like if you bring an HVAC tech out because your, AC is broken and they want to replace the whole thing, right? Or make
Hmm.
it so that you have like something, but you're actually, suggesting a service instead, or, weighing the pros and cons with them and not always doing it. And so that's really helpful from like a tax planning strategy, going forward.
Absolutely. And another thing that I'll say, just a little tip, in service, right, is not a hard and fast rule. It's not There's not a
Okay.
hard and fast definition, I should say. It's a hard and fast rule, but there's not a hard and fast definition. You bought it, you've done a few things to it, and now it's on the market to be rented, but you just can't find a renter. It's in service because it is available to receive revenue,
Mm,
right?
okay.
Because you open a restaurant and you might not get customers for the first week. Does it mean that it's not in service? See what I
No,
mean?
I like that. I like that.
So keep that in
Well,
mind.
thinking about your overall journey into this entrepreneurship space that's, real estate adjacent, what is the biggest lesson that you've learned on this journey that you wish you would have known sooner?
That it requires a whole lot of putting myself out there. I live off grid in the New Mexico desert. I am 2 miles from my nearest neighbor on purpose.
Yeah.
I didn't use social media from 2018 till 2024 when I started being a TC, because here I
Mm,
am again having to, actually that's not true, from 2020 to 2024 when I shut down my business, right? My personal chefing service. I had to put myself out there again. As my regional leader partner told me, she said, if people don't know you, they can't do business with you. And that's so the truth, and I'm
mhm.
like, all right, B, you got to get out of your little desert bubble. I know it's nice in here, and you and the coyotes and the ravens are chilling, but nobody can hire a TC that they don't know about. And
Right.
so I had to really put myself out there, and I don't take pictures, I don't take selfies. So here I am, like, recording talking head videos and just cringing inside. So I wish I had known that sooner so I could orient myself around being comfortable with that, because it wasn't comfortable even the first time I did it with my personal chef service, but I did it so well. And
Mhm.
so that's why after only about 8 months I was just on a referral basis at that point.
Yeah, yeah, and that's because they knew you, right? Because they wouldn't have done business with
Right.
you if they didn't know you, and so now they're getting that
Exactly.
referral, so it ties back in, yeah, and, I appreciate that because I asked Pace Morby a very similar question recently. Last Sunday, we were together at one of his mobile home parks, and I was like,
Oh, nice.
"What's one of the things that you wish you would have known sooner?" And he gave me two answers, and one of them was, "I would have started social media way sooner than I did." And
Yeah,
the deal flow and everything that's come from his social media is huge. And so this is like a nice reminder of that,
it's
that's
so
true
true.
too. Like yeah, if people don't know what you're doing, like how could they reach out to you about it? How would they know that they want to work with you? Because they have no
Exactly.
idea what you're doing.
Exactly. And
Yeah.
what was the other thing he said? I'm
Oh, the
curious.
other thing he said was he wished he would have done bigger asset classes sooner. So he said
Yeah. He did say
ended
that
up with
recently. I heard him say that recently, yeah.
yeah, he said he ended up with around 300 single family rentals, and he was like, "Why I ever went beyond 25 is absolutely insane to me. That was the dumbest thing." But he said probably around 10 is like the right amount for people, and then they should move to something bigger. And I was like, "Well, that's interesting because I'm at 10 right now, and I am feeling that too."
I hear you. No, no, that's awesome. Yeah, I thought about that when I finally decide to start doing investing outside of land. Like, what do I
Hmm.
want to do first? And I definitely want to get into community living. There are a few populations that I really want to serve,
Sure.
and so I would do that. And then, yeah, maybe 10 or 15, and that's it. And then start on tiny home communities. for
That'd be
obvious
great.
reasons, right?
Yeah, you guys have a lot of experience with that, so that'd be
Yeah.
perfect.
Yeah, no, that's cool. But, putting yourself out there, in addition to the social media, it's actually going to events and putting yourself
Right.
out there, and so that's
Mhm.
something else I had to start doing. And I remember the first networking event I ever attended as an entrepreneur was at, so do you know Ray Lewis, the former football NFL player for the
Yeah.
Baltimore Ravens?
Mhm.
He had a restaurant in Baltimore, and excuse me a moment. He was having a networking event for young Black entrepreneurs, and I was at the time, how old was I? 25, and this was the first time that I ran my personal chef service, not the revamp, right?
Yeah.
So I think I was like 24, 25, and I went to this event, and I didn't know who he was, even though I lived in Baltimore. I don't follow American football, so I had no clue, and I didn't know this was his restaurant, even though his name was on the front. So I'm sitting there networking, and somebody's like, "Mr. Lewis would like to speak with you. He hears that you're a personal chef." I'm like, Tell Mr. Lewis I'm busy. Like, I clearly I'm talking to people." So long story
That's
short,
amazing.
he was one of my first paid clients with the first rendition of my personal chef service. Yeah.
Yeah, I can super relate to that because I feel like I don't know any famous people, so I'd probably do like the same exact thing, but I'd probably be even worse. Like I'd probably like somehow insult him, be like, "Who does this person think he is?" or something. I
Right.
don't know. So I think that's really funny. But I also relate to the whole social media thing too, right? I feel like it's a constant conflict for me in my head where, to Andrew's point, if people don't know who you are and what you're doing, how can they ever work with you? Like that makes zero sense, right?
Right.
But when you said like you were taking selfies and like cringing, I was like, yes. So
Yes.
so it's like a double-edged sword where you're like, I really don't want to do this and this is really awkward and I feel uncomfortable. But
I'm telling
if you
you.
don't do it, then no one's gonna know about you or what you're doing or literally anything.
No,
So
you're absolutely right. And that encounter with Ray Lewis showed me like, hey, he puts his pants on the same way that I do, and I went to his house and he had all the little Tykes toys that you could possibly think of in his front yard for his children, his dogs were there. And I'm like, yeah, this is just a dude. Like, this is just a guy. So so from that point on, I was never afraid of approaching the CEO, the whomever. Like, I didn't care who they were. If I knew I could do business with them, I was doing business with them. So like,
yeah.
second time around with my personal chef service, that very first client I got, she was the VP of global marketing for all of Under Armour, right? And
Oh
she had
wow.
just moved to Baltimore 7 days prior. She had a 4-day-old baby, right? And I ended up staying with them until baby Julian was 2.5. So all his first foods I got to give to him. And so she introduced me to the VP and then the general manager of global marketing for Under Armour. So those were my first 3 clients. So I've never been afraid of just going after whales, as they say.
Yeah. Yeah, of course. That's I'm just super impressed by I don't want to say the level, because I mean people are people, but
Yep.
like, you're saying like the SVP and stuff, like
Hmm.
that's super impressive what you were able to achieve at that last job.
Yeah,
So
because
kudos to you.
everybody needs something. And why not? Why can't that something be from me? So
No, for sure. For
these are
sure.
busy ladies. They didn't
Um,
have time to cook for their families. I was like, I'll do it.
I will say that is like the one thing, if everyone was like, hey, what's one thing that I could do for you, or the thing that you want most, personal chef by far. Like, give me someone
Absolutely,
who's gonna
right?
cook all my meals. Like, that is it. So, when you said that you used to do that, I was like, oh my gosh, that'd be such a dream.
It's so
So
great. It's so great. And it's a lot more affordable than people think, right? Because I don't use the word expensive lightly. For me, expensive is when I'm paying a lot and there's very little value. But if I'm
yeah,
paying a lot and it brings me a lot of value, it just costs a lot. It's not expensive, right?
yep,
So personal chefing is not expensive. It's really not, depending on who the
yeah,
personal chef is, obviously. But when you think about, so when I was marketing, um, the way that I marketed was, you're buying time with me.
mm-hmm,
Screw
yep,
my skills in the kitchen, which are great, by the way. You're buying time. How much time, how much would you pay to get an hour and it was 1.75 hours. So what is that? An hour and 45 minutes back in your day? An hour and 45 minutes.
Mhm.
As grown-ups, we know that's a lot, right? And so that's the thing about being an entrepreneur is how do you market? And you have to know who your audience is and what they want.
Yeah, absolutely. I think that's been brought up quite a bit, maybe by pace, like in the community, like what is the value of your time, right? And
Mhm.
can you outsource these other things? So, I mean, it really hits two birds at one stone. You get your time back and you get great food.
Yes.
So, like, yeah, absolutely
Winning,
sign me up for
right?
sure. Yeah, 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 definitely. And then I just had a few questions for you about a comment that you made at the very beginning. So I know you had said like, what would we do if like money wasn't an issue, right? So how like were you in a position financially to have that opportunity, right? Because like I think about that all the time. Like if money's not an issue, what would I do? So I'd be like, I would work at a coffee shop and talk to dogs all day,
Oh,
but I probably wouldn't make that much money, right?
right.
So whenever you were doing this and you're like, hey, we're gonna be, he's gonna be a barber, I'm gonna be a chef.
Mhm.
Like, I guess, what did that conversation look like for you guys?
So, I think at the recent squad up, I think Dean Graziosi was asking, "Are you ready?" And he said, "The answer is no." Right?
Hmm.
That was what the conversation was like. Can we afford this?
Yeah,
Um, I don't know, but can we afford to continue chipping away at our spirit every single day and dying inside at this job? No.
yes. Okay.
So
Yeah,
that
yeah,
was the
yeah.
conversation, and then what I did was I reverse engineered my salary and I said, "I would leave this job for another corporate job if it paid me 15% more." But also remember I was talking about how I had this chronic disorder. By 2016, I was 3 years into these chronic diseases. They came in
Mm.
2013. So I was like, I want something where I only have to work about 3 days a week and make about the same amount of money. So I reverse engineered the salary down to the hour, and then I calculated how long does it take for me to go out and shop and cook and clean and come back home, and I put a rate on that. And so I eventually ended up making 1.25 times my weekly salary in 3 days.
Oof.
Yeah,
Wow. Okay. Okay.
yeah,
All right. So you obviously had some thought like
yes,
behind this and you like strategized it.
I
It
did.
wasn't just like, hey, yeah,
I
yeah.
did. With
Yeah.
him, it was just like he was gonna die if he stayed here, or he was gonna get fired or arrested. So, you go ahead and
Can relate to that. Not in my current job, but yeah, I understand. Yeah. So
he always says to me, he always quotes I was about to say Michael Jackson, Mike Tyson, where he says, "We're in a generation now where people think they can't get popped in the mouth for the things they say online." And I'm like, You right." So why don't you go barber before
yeah, yeah,
before
yeah,
this
yeah.
gets ugly? But eventually he
Yeah.
ended
Let
up,
me, yeah.
making more than I did. He had a constantly booked. He was only by appointment. Even now, how many years later? 10 years later, still by appointment only because he's that busy. And that did
Yeah.
a lot of that was marketing. Like I did all the marketing for both of us.
No, it definitely makes sense. And I kind of want to transition this into another question because obviously you have a lot of experience of, maybe you guys were both, or more so your husband, in like a soul crushing job, and then you took the leap into something that you strategized maybe more than him, but it ended up being successful, right? So let's talk about someone that's newly thinking about their like financial independence journey.
Mhm.
So maybe they're starting to learn more about finances, or maybe they just graduated from college and they're in a position where they need to start thinking a little bit more realistically about how to save or just what their future looks like.
Mhm.
So in about like 30-ish seconds, like what kind of advice would you give someone who's on this new financial independence journey and exploring new avenues?
Be very clear about what you actually need in your life. You will find that your footprint is a lot smaller than you think, and learn to cook from scratch. Those are the 2 things I would say because food is so expensive, and I say
Yeah.
expensive
Yeah.
because a lot of these days, restaurants are not giving a lot of value. They're just charging you a whole lot, right? So, figure out your actual life footprint where you can live comfortably with some joy, right? And learn how to cook from scratch.
Yeah. I like the cooking thing. I will say I could definitely improve in that area. But I also relate to what you just said that lots of places aren't giving you any value anymore.
Mhm.
I probably shouldn't even say this, but I, for some reason, I decided it'd be a good idea to go to Taco Bell. And I used to eat there all the time in high school, right? And I was like, oh, it's super cheap. Like, we're going to get so much food for like no money. Like, I was
Right.
just in a bad mood. And I go through and I get like a stupid chicken quesadilla, right? I get home and I was like, this is like disgusting. This is like the flattest, grossest. Like there was no meat. There was like a
None.
slop of cheese.
Right.
And it was like, I paid like almost $20 for basically no food. And I
Taco
was
Bell is not the
so
same.
annoyed. I was like, this is supposed to be like disgusting, bad, cheap food. Like
Right.
you can't charge me a lot and also have it be gross. That doesn't make
Exactly.
sense. So yeah,
Like
I agree with
you
you.
were willing to make
Cooking
the
is a great
compromise,
skill.
right? But then you saw the bill. It's like, this is not the Taco Bell of old.
Right. Right. So I like that. I like that. We haven't heard that before, but I totally agree with that. And if I could go back,
Hmm.
I would definitely learn that skill a little bit more.
Yeah.
So,
It
and then
saves so much money.
yes, looking at my bills, yes, it does.
Yes.
And then what would you, generally speaking, this might be like kind of hard to answer, but what advice would you give to someone? Maybe they are in that situation similar to your husband,
Hmm.
where they're at a job that maybe they just like literally can't stand and want to get out of it, but they don't know what steps to take next.
I'm not going to say blindly just go out on faith. Obviously, from what I was saying before, I did a little bit of calculation and I said, okay, we can weather this much of a storm and we only need this much of a footprint, which is eventually why we ended up living in a tiny house. When we did that evaluation, we said, we only use the kitchen and the bedroom and the bathroom. Let's go. Right? So, if you're about to make that leap and you really just cannot stand where you're at, remember, first of all, you have the key to the cage and it's locked from the inside. No one is keeping you there. And you can open up that door and free yourself whenever you want. But you want to be able to free yourself and land on some sort of ground, even if it's shaky, right? Don't land on no ground. Even when I left with no clients, it seemed like no ground, but I had some savings. And I realized, and I cook from scratch, right? So that saved us probably about $400 a month. So it's like
Mhm.
I knew we were going to be okay to a certain extent. And I also had the wherewithal to pay for leads, So it's like, don't just go blindly. Have this much of a plan. You don't need this much of a plan. You need this much of a plan and this much of ground below you. And then go.
I love that. Man, you have the keys to the cage and it's locked from the inside. That
Yes.
is like so good. Oh my goodness. You're getting to me on that one. That was a
You got a word today.
yes. Wow. Write that down after this. Like, oh my goodness, that was so good. Well, thank you for sharing that. I think that's some great advice. Now, I want to move on to a little bit of a fun question, and I'm curious if this is going to be like some sort of remote desert thing for you. But just knowing like you're Alyssa and I have a goal
Uh-huh.
to travel and to explore and have fun
Yeah.
while we're on this journey from a
Yes.
wealth building perspective. We don't want to wait till the end of the journey to finally start enjoying ourselves, and so
Yeah,
trying to do it along the way.
absolutely.
And so wondering if you have any upcoming bucket list travel that you're hoping to check off in the next couple of years.
Yes. So I want to take my goddaughters to Euro Disney because they live in Barcelona.
Oh,
So
nice.
that's definitely something that I want to do. I might get to do that this year, but I also want to take my husband to Korea. And
Ah,
that is absolutely planned for next year. Absolutely positively. Yumi, Kaz, and I said on our birthday we're going to Korea because we haven't been in a long time.
awesome. That's going to be so much fun. Does your husband, I know you speak Korean. Does
Mhm.
your husband speak Korean?
He's Dominican. He speaks Spanish.
Oh my goodness.
Yeah.
You guys are just multilingual over there.
I
I
speak
love
Spanish too.
it.
So so it works. I also speak Portuguese.
Oh my, wow.
Yeah, it's pretty
That's,
neat. It's fun. It
yeah,
opens up my world. It definitely does.
yeah, that's awesome. And I love that you have those things planned. I've never been to any of the outside of the country Disney experiences. So I bet
Yeah.
that that would be really, really cool.
I'll report back.
would love that. We would love that. Well, if someone wants to get a cost segregation done,
Mhm.
what would be the best way to get in touch with you?
Well, I'm happy to announce that there is actually a link to get directly to me inside of the Sub to Kajabi.
Oh, amazing.
Yes.
That's so cool.
So we have signed as the preferred partner with PACE and the communities to provide cost segregation services to all of you. But other than that, you can reach me. All of my contact information is at my Instagram account, which is simply at the Cost Seg Lady.
Oh, I love that. That's such a cute name.
Super simple, right? Because I figure why
Yes.
overcomplicate it? Because when people are referring me to other people, they'll be like, "Oh, that Cost Seg Lady." There it is.
Yes. Oh, that's perfect. That's great. That is a great way to brand yourself and make sure that people can find you to get themselves set up with a cost seg. So thank you for that.
No problem.
And I feel like this has been a really fun podcast. I feel like I've learned a lot on
Good.
this, from like a tax standpoint and also just in general about your journey. I think it's been really, really interesting. And I love that you really took those leaps, like both you and your husband. That's so impressive.
It's like we were very aligned, and I feel like that's such a blessing because I have heard stories of couples where they're not aligned in that way, and one wants to take a leap and
Yeah.
has all the faith in themselves, but the other
Right.
spouse is like, "Oh, but I'm afraid." And the two of us, we will tell you every single day, we will always bet on ourselves and we will always bet on each other every
I
time
love it.
without fail. So I think it's just when you have that dynamic, it's like, "You want to do this? Yeah, okay, let's do it. Let's go."
That's awesome. Well, thank you so much for sharing your journey today. We super appreciate it. And thank you, everyone else, for listening to this week's episode of From Corporate to Cash Flow. We'll catch you next week. Hey, it's Andrea. Thanks so much for listening to this episode. If you liked it, I'd love it if you hit subscribe. Thanks so much.